Hey Bowtie Nation, Joseph Hogue here with 10 stocks that exploded as much as 400% on rumors back in October, only to quietly pull back while everyone moved on. But now might be your last chance to buy as rumors of government investment become policy, and that policy turns into deals. I'm going to walk you through the four areas the US is buying, how tens of billions of dollars in grants are being turned into investment, and the 10 companies President Trump is screaming, I want that stock. Understand the force behind this is a change from government subsidies, grants, and tax credits, basically free money to grow a part of the economy, to making an investment in the companies themselves. For investors, that is where things shift from just interesting to explosive. Because just think about the scale here. We had $52 billion in CHIPS Act funding alone, the government program to boost US semiconductor technology and manufacturing. Then add into that tens of billions of dollars in other programs, like the $6 billion already earmarked for critical minerals. Now zoom in, most of these companies I'm going to highlight are tiny by comparison, under $3 billion market cap, one even under $750 million, trading for just $4.47 a share. If you drop even $500 million or $1 billion into a company that size, and you're not just nudging the stock, you are rewriting the story. It's why these stocks spiked on rumors in October, but with investors chasing every shiny new object, these 10 stocks have gone forgotten, sold off, and are offering one last chance to buy. That's because when the actual deals are announced, the formalized investment by the government, it's going to take these names higher long term. And the biggest impact here, and 6 of the 10 stocks I'll show you, is in rare earth and critical minerals. This is a national security bottleneck that affects everything from AI to missiles, fighter jets, EV batteries, and smartphones. This isn't just electronics, but catalysts, magnets, and inputs into nearly every sector. These rare earth elements, like neodymium, dysprosium, and others I won't even attempt to pronounce, are not only so rare that they're found in less than 0.00012% of the Earth's crust, they're also extremely difficult to mine and process, meaning the profit just isn't there for companies to target that production. It's how China, through state-sponsored programs, has cornered the market, controlling almost 60% of the global mining, more than 90% of the processing for these metals. That's 90% of the supply of these critical inputs to national defense and technology that could be shut off at any time. And that is why the government has already announced more than $6 billion in grants for the domestic mining, processing, and refining, and why those grants are now being turned into equity investments. Because when you do that, ownership changes incentives, it locks in the supply, it ensures these projects actually get built instead of dying in spreadsheets. First up here we have Trilogy Metals, ticker TMQ, jumped 409% in the October news. This one was on the government's proposed investment in the upper Kobuk mineral project there in Alaska, which is a mineral area, rich area of copper, zinc, and lead and other rare earth minerals. The administration also ordered an access road to this Ambler mining district, so basically paying for access and development of this. The government is going to invest $35 million for development, gets a 10% investment into this company, into TMQ, plus warrants to purchase another 7.5%. I'm going to talk through all these rare earth element stocks, show you why the government is interested in them. But you do need to do your own research here. We're going to look at the analysis here, look at the earnings and revenues estimates, and you'll see this across these names. Very tiny companies, $1 billion, $2 billion companies with no revenue as of yet and deep in the red as far as earnings and cash flow. Here on the cash flow statement, you can see that operating cash flow, negative $2.6 million over the last year. That's going to accelerate as the company has to develop some of these resources, but it does have that backing from the US government, paying for development of some of these mines and some of these resources. So that does help boost these shares a little, but understand there is a lot of risk in these. These are kind of do or die, all or nothing stocks. We also have Critical Metals Corp, ticker CRML, a company of just $963 million, under $1 billion there, so a true penny stock, jumped 414% in October on the news that the government was interested in its Tanbury's rare earths project there in Greenland. This is a lot of the reasoning why Trump was talked about the U.S. buying Greenland for so much, because of that strength in rare earths there on the Greenland. U.S. would get about 8% of this company. Now I'm going to reveal 4 more of these rare earth stocks and 4 others the government is targeting. But understand, again, for a lot of these stocks, this is an all or nothing idea. If a government ownership deal is signed, that stock price is going to surge. But if nothing happens, well, you definitely want to limit your downside, which makes options investing the perfect tool for these stocks. For example, I can go to the options available for CRML here, and you can see that the options trade in weeks and months, even all the way up to January 2028. So a lot of time there. I'm going to use the May 2026 options. Gives us about 6 months there. Gives us time to let these government deals work through, boost the stock price once again. We're going to use a simple call option strategy. Remember, buying a call option means you pay a premium for the right to buy those shares at a set price. You can lock in the price of the stock here for a certain date. We see some of the prices up for those. We see we can lock in the price of $10, $10 per share of the stock for $2 right now. For a premium of $2, paying that premium for this call option, we can lock in those shares for $10. And while that might not seem like a great deal right now, with the stock at just $8.17 each, if the stock does run back to $30 each, like it did in October, I'm going to have a profit of more than $18 a share on this investment, of the investment of just $2 each. If we look at that scenario, if those shares go to even $30, where it was in October, and we have those $10 call options, those options are going to be worth at least $20, okay? Because you could buy the shares for $10, sell them immediately for $30. That is going to be $20 divided by the $2 that you paid for that option. That is a 10 times return on your money, 1,000% in just the 6 months it took through that options expiration. With that kind of upside, you can buy call options on all 5 of these rare earth stocks, and if even one of them gets a deal, you're going to be making some serious money. There are other option strategies you can use here. Another one, the call spread, one that I like. You can buy those $7.50 call options for $2.87 here, then sell the $15 ones for $1.23. That lowers your cost to just $1.64 for the $7.50 ones. That means that shares only have to go to $9.14, and you're going to start making money. You're going to start making money on that spread after $9.14 on the shares. If they go to that $15, that is a $7.50 spread. So 7.5 divided by 1.64 that you paid, you're still going to be making 4.5 times your money, 357% return on that call option spread. It is a lot less risky because the shares only have to go to $15 to max out your return on that. I know a lot of that options lingo can be confusing, but to help you get started and understand how to use these options of this type for that leveraged return, I'm extending the relaunch of our options course. Over 3 hours of video, I start you with the basics, then walk you through 29 option strategies, when to use each, and how to set it up, including a real-world example with shares of Tesla. The course also comes with a one-of-a-kind strategy finder to help you find the right option strategy, and an options calculator to show you exactly how much money you can make. And right now, I'm relaunching that course at a 38% discount. Save $150 off. You're going to get all the basics you need to get started, the strategy finder to make sure you're using the best strategy, the options calculator to show you exactly how much you can make, walkthroughs on all 29 strategies, and a 14-day money-back guarantee. That $150 launch discount is only available with the coupon code I'll leave in the link in the description, so make sure you click through that link or just scan the QR code here. Back to those stocks though, we have Lithium Americas, ticker LAC, one of the larger companies in the space at almost $1.5 billion, up 242% in October. Here we saw the interest from the government in the Thacker Pass mines there. The US is going to receive 5% in the parent company, shares of that LAC, and 5% in the Thacker Pass lithium mine there in Nevada, that joint venture with General Motors. Now, the lithium, that is a linchpin for building domestic supplies there, the metal used in batteries for EV, other electronics, a critical mineral that we just do not mine enough here in the United States. You've also got MP Materials, ticker MP, one of the few stocks that has actually held a lot of its gain here, up as high as $100 per share in October. It's really the largest of the rare earth stocks, $9.4 billion market cap. So this is a giant company compared to some of these others. It actually has some really good fundamentals that make it a lot safer than a lot of these others. This one is around the Mountain Pass mine there further. It's the furthest in talks and an agreement. US is going to get 15% stake in this Mountain Pass rare earth mine in California. It's the only US rare earths mine there. The Department of War is going to become the largest shareholder in MP Materials. And if you look through some of the fundamentals of this company, you can see that it is a lot less risky than some of the others already producing revenue. $275 million revenue expected this year. That is 35% growth from last year. Next year, up to $615 million as some of these resources get developed. 124% growth. That is amazing for a miner there. Still operating in the negative there. Negative earnings per share of 28 cents per share expected this year, but is actually expected to start turning a profit next year, 74 cents. So that is very strong. That is a lot less risk than some of the other stocks that we see on this list. Next here, another one of the relatively larger ones, $2 billion USA Rare Earth, ticker USAR. Relatively larger, $2 billion is still a very small company. This went up 141% there in October as these rumors started coming out, the government's interest in these rare earths. And another one that just popped on the news here, Korea Zinc Company. This is actually a Korean company, not available on US stock exchanges, but I'm going to show you how to get access to this. This is the US acquiring 10% of the $7.4 billion smelter in Tennessee that this company is building. Department of War is going to hold 40% of that joint venture, with the Commerce Department providing $210 million in subsidies from the CHIP Act. But because those shares aren't available on US exchange, what you can do here, you go to the iShares MSCI South Korea ETF. That's going to be the ticker EWI. One of the ways I really like to get these foreign shares that aren't available for US investors. You can go here to the holdings and see all the stocks in this. A lot of these other companies that you're not going to have exposure to if you're just staying on the US exchanges. But you can come in here, type in that Korea Zinc, and you can see that it does own shares of this. This is only 0.5% of this ETF, so it is not going to be a big factor in the growth of this ETF, but it is probably your only way to get shares of this. Another focus of the government here is in semiconductor manufacturing. While NVIDIA and AMD are US companies, most investors don't realize that they only design these kind of neurons of the modern tech economy while they pay someone else to manufacture them. And that someone else is almost exclusively Taiwan Semiconductor, which manufactures more than 60% of the global semiconductor supply and upwards of 90% of the high-performance AI chips. And you can see that's a bit of a problem, considering the island of Taiwan sits just 100 miles off the coast of China, and the CCP has long had a singular goal to take control over it. That means the most critical component of any electronic device, that's AI systems, defense platforms, every computer could be crippled without those chips from Taiwan. And of course, the big news this year was that 10% equity stake in Intel, ticker INTC. Intel was about to get the $11 billion in CHIP Act grants, but instead got a 10% equity stake for the US government worth $8.9 billion at the investment. It's really going to strengthen the US supply chain and chip security if the company can expand its advanced manufacturing here in the country. You can see these shares are up 87% year to date on the rebound and the government support. Against that upside potential though, as I pointed out in our video on the coming chip wars last week, Intel is probably my least favorite semiconductor stock. The manufacturing segment might get a boost from that government support, but it is still way behind on design and is the only company of the 10 that I researched still posting losses. Revenue growth here is expected at just 1% annualized this year and next, and there just isn't much going beyond hope right now. I'm going to link to that video in the description so you can see that full analysis and which chip stocks I'm buying in this giant shift in semiconductors. Flying under the radar in all of this, though, is the potential for steel and stocks in that industry. President Trump has bet his legacy on a return to manufacturing and shipbuilding in particular, all of which will need massive amounts of steel. That means control over the production here isn't just nostalgia, it's going to be a national security issue and the ability to build at scale when it matters most. That's why the US demanded a golden share in the US Steel to approve an acquisition of the steelmaker by Japan's Nippon Steel earlier this year. It's not a direct investment in the company, but does give the government veto power over strategic decisions going forward. I'm going to show you the stock for this next, but just like Steel built America, likes build this channel. So if the analysis has been helpful, please tap that like button so more people can see it. Now, there's not a specific steel stock I'm watching, but this government support could mean returns continue for the SLX, the VanEck Steel ETF, of 45% this year already. If we go here to the VanEck Steel ETF, the SLX website, we can see there's 24 companies mining and processing steel. We can look down into the holdings for this stock, see all the information and what shares they're holding. Very important to look through any ETF that you buy, what they're holding. You can see all the 46 companies that in this stock, from ArcelorMittal, Nucor, a lot of companies, foreign companies that you might not have access to otherwise, except in this. But you've also got Cleveland Cliffs. You've got all the major U.S. producers and refiners, processors that are going to get a lot of support from the U.S. If you scroll down further here, you can see the industry and the country weightings here. You see the United States, 51.1% of net assets. So 51% of those 46 stocks, they're going to be from the United States. Brazil also has a large chunk of companies there. Australia, Netherlands, South Korea down here. Now, this next group is just starting to hear rumors and could be about to pop. But even against that upside, this isn't my favorite investing theme right now. It's not artificial intelligence either. Make sure you watch the video in the corner here or linked in the description next for the future of finance and the stocks I'm buying to be ready. President Trump's Secretary of Commerce told CNBC that there has been, quote, monstrous discussion around defense and these kinds of investments. Most defense spending is through procurement contracts rather than subsidies, but just the size of that spending, over $900 billion in fiscal 2026, is staggering. But before that first stock in the group, I want to get your input on this theme. Let me know in the comments which of these three industries, that rare earths, semiconductors, or defense, do you think is going to get the most attention over the next year, and which stocks are you buying? Secretary Lutnick said in that CNBC interview that Lockheed Martin, ticker LMT, is basically an arm of the US government. I'm not so sure the shareholders would agree on that, but it does make the company target number one for this kind of investment as the world's largest defense contractor. You can see here it's down 0.3% this year, so obviously not getting any kind of a boost from this rumored support by the government. Could be about to pop if those come through. These are some of the most critical platforms, like the F-35 jets, missile defense, and advanced radar. I think shares of RTX, ticker RTX, that's the old Raytheon, fits here as well with its Patriot missile defense system and critical surface-to-air missile capabilities, considering the direction warfare is going. Here, a U.S. stake would help secure supply chains, ensure sustained production of missiles and air defense systems. Get your $150 discount and learn how to use options to boost returns, lower risk, and create income with the link to our options course in the description below. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.